Good morning, traders. It is Thursday, September 26th. Taking a look at the charts. We've got the SP500 30-minute chart here. We're zoomed back all the way back into really April, late April. And more or less, you can see our trend analysis system where we go from green, which is an uptrend, to orange, which is a trend reversal. And then we get into a downtrend and then back into a reversal with orange and an uptrend. And we've been oscillating through these market conditions. And there's certain times you want to be long equities, you want to be long bonds, or safe havens, or utilities, and back into equities. You can see that we had the price rotate breakout. We are currently in green bars, and if we zoom into the current price action, let's just take a look at the recent bars here. Over the last two sessions, we've seen the market dip down into these oversold territories, really the last three sessions actually. Yesterday, we ended up seeing we had a significant stop set right along this previous pivot low over here. And we use a stop on close, meaning you don't put a stop in place, you wait to see where the market's going to close, and you can exit the position if the price is going to close the day below the stop, or you exit the next day at the open if it did close below the stop. Some brokers can have this feature, others don't. But that's how it works. And you can see this very clear level here, this pivot low. The market loves to make nominal new lows and new highs. And that's what this was yesterday. We had a sell-off. It was a nominal new low, breaking this here where thousands of traders around the world had their stops set. And when it broke that level, it triggered their stops and they got stopped out. And then the market ripped to the upside and never looked back for the rest of the session. That's how the market loves to do it. That's what happens with nominal new highs as well. We had a significant standout high right here. The market came all the way up, pierced that high by a couple ticks, and then crashed down and got everybody. All the shorts got out, so they're now out of the short, and then the market falls without them in their short position. The market loves to do these type of things repeatedly. So that is why we use on our initial trade, we use a stop on close. Once we hit our first profit target, our stop goes to break even and it becomes a hard stop. We want to get out if the market starts rolling over and touches that price, and we don't want to take any give back any more than we have to. So always our initial stop is a stop on close, and then we move to a hard stop once the first target is hit. Now, if we look at the SP500, it is still trading in a range where we need to be very cautious. We are still, you can argue here, we're kind of trading in this range or at the upper end of it. We're in a high volatility time here, and there's still a gap window that is a little bit of a concern, although we did fill most of that gap window. I think we filled about half of it, which is all that really needs to be filled going forward to more or less satisfy my gap fill window theory. But overall, the market has had this hook to the upside, very similar to a hook to the upside. We're still in this range, and we could very easily see the market reverse and sell off or potentially do some huge volatility in here. And we're not out of the clear yet. This was a really nice reversal. I showed you the intraday chart yesterday in an update. Huge volume, stops got run. Usually when the stops get run, that's a significant bottom. So we're hoping we get some follow through over the next day or two. Maybe it'll hold up and then continue to rally and start to break out. And if we look at the daily chart, you can get a feel for the bigger trend picture. Let's just focus on price here. If we were to take a Fibonacci extension to get the momentum from this move, there's a couple different levels we could go. We can go from the low here to this high and down to this pivot low from yesterday, carry that forward. And then there's also a more significant run, this standout low down here to this standout high, and then back down to yesterday's low and carry that forward. It gives us some pretty big boxes, but some upside targets where we could see the equities market run to. Overall, this first move, we could very easily see come up into this range, and then this is the first 100% measured move, and then there's potential for it to potentially go all the way up to the 3170 area going forward, which would be a very significant move. More or less, that is this move, the quick pullback, and then the continuation rally. That's the second half of the move. So there's potential here for some pretty big upside moves in the equities market, but it needs to find a bottom. It needs to start to break to new highs. We got to get to this 618. If we can hit the 618 and have some type of pullback, usually we see the 100% measured move hit almost every time. So that's what we're looking for. And again, if we see the equities market start to break out and we get follow through buying, there's going to be some pretty big selling in the safe havens like bonds and precious metals. So let's jump over to, let's go to bonds here. Bonds up 0.5% this morning. Yesterday, they really took off to the to the downside. They really collapsed, dropped 1.6%. The TLT ETF, big pullback. Overall, we're seeing it trying to eat through resistance. It's also trading with the 20-day moving average. We got the 20-day moving average here. We've got this previous high into this area here, which is going to act as resistance. And so the big question is the equities market, to me, is the driving force, and that's where the rest of the money will start to filter through the system depending on what the SP500 does. So if the SP500 breaks down, we're going to see bonds move up, safe havens continue to move up. But if the equities market can break out over the next few sessions, we are going to see this probably come down and test these recent lows way down here. This would be the halfway mark. You've got your bear flag and then the second half of the move down over here. Now let's take a look over at the safe havens. Some news just came out. We're just seeing the market start to spin pretty quick. We're seeing a recovery in gold and bonds, and we're seeing the equities market just start to reverse down a little bit here. But overall, big down day there in the precious metals across the board. Miners down 4.5%, almost 5%. Again, we're still waiting to see how things are going to unfold. More or less, we've got a potential head and shoulders here. This is more of a bear flag feeling to it, that if it gets some traction, it's going to have a pretty significant decline, really cleanse the market. Of course, silver will do the same, miners will do the same, just at different percentage moves. But this is what the precious metals sector looks like. It is still in an uptrend to the most extent, but it has got a topping formation and potential for a pretty big three-wave correction to the downside, which would be 1, 2, 3. And it's that third wave down that breaks these pivot lows. This pivot low over here, that creates the stops and the panic selling. It cleanses the market for it to start another leg higher. If we take a look over at energies, natural gas up 0.7%. Still trying to carve out a bottom. It is in a nice uptrend. It's pulling back to the 20-day. Yesterday looked like a pretty nice little bottoming candle to some extent. It still didn't close above the previous day's closing price, and really didn't close above the opening price. It's still struggling in a short-term downtrend, but it did sell off and have a strong recovery. I'm keeping my eye open for a play in natural gas if we get a nice clean setup for potentially another big move to the upside. Again, upside potential here. We had a huge run. This will be the first pullback, and then you could buy the first pullback and we could see a much larger run going higher. But the question is this going to do a little bit of a running correction and have a bigger pullback and then go higher, or is it going to try and carve out a bottom and then continue to go higher? That's kind of where we stand at this point. I'm not too anxious to get into play there just yet. Looking over at crude, down 0.6%, continues to move down with this bearish formation with the downside target more or less being around this 55.50, more or less. And it's come all the way down and filled this gap, 100% gap fill. So that news-based gap did get filled. If we look at the high of this day, and we go all the way to the opening price, you can see prices come all the way back down to fill that last day's high. So that gap, that candle came all the way down and filled it. So more or less, this whole news-based pop faded into, and now we're just waiting to see what crude is going to do next going forward. It's got real mixed signals. I'm not too interested in trading it at this point. Last but not least, let's just take a quick look at the US dollar index. Yesterday, big day up in the US dollar, and that was one of the big reasons for metals and miners and commodities to pull back there yesterday. It still looks like it's got some traction. It could continue to go higher. Overall, I'm looking for about 100 on the U.S. dollar exchange. If we were to just look at the chart for that, we still have potential here. We came up to the 99 target. We were talking about the 99 target actually down over here. We had this nice three-wave correction. It was a perfect Fibonacci correction. We talked about it for a couple of days as it was unfolding. We hit to the dot here, 100% Fibonacci correction, this ABC three-wave correction, cleansed the market, and then we had 99 on the next upside momentum move. And overall, the long-term picture, I still have 100 on the US dollar index. So if the dollar does reach those levels, we're going to probably continue to see metals struggle a little bit, although the safe havens are the dollar and metals. They are moving up together more or less in general. So overall, there's still more upside potential, I think, in the dollar, and it could put a little bit of pressure on metals going forward here. Anyways, that's it for now. Talk to you in a bit. Bye-bye.